As one of the few Intel bulls left on this planet, I thought this was a great time for me to update you on, well, my position in Intel, what I'm going to do, will I buy, will I completely sell out, will I move to some other stock. I know Intel is definitely not a popular name, despite it still being quite a big and important company. And yes, there is a new chair, finally. No couch yet. At 100K, there will be a couch. Anyways, in this video, I want to talk about the current state of Intel. Of course, we already touched on the fact that, well, Pat Gelsinger left or was pushed out, whatever floats your boat. But in this video, I want to touch on Intel, the business, the good and the bad. Full disclaimer, I still hold a position in Intel right now. I'm really debating whether or not to buy at $20 or just wait until the new CEO gets announced. Because if the new CEO is another MBA type of name, not really an engineer, someone from the industry, then what's the point, right? Then what's the point? If it is someone that is an engineer, someone that comes from maybe a competitor, someone that comes maybe from Broadcom, Marvell, something like that, then maybe things do start to become more interesting. By the way, I still think that pushing Pat out was a huge mistake. And I'll show you in this video why the current state of Intel should not be blamed on Pat. Those of you that are saying, or maybe not you because you're smart because you're watching these videos, but I've seen some people blame the performance of Intel on Pat. Shall I remind you that Pat came back in 2021. By 2021, the damage has been done. Anyways, I'll explain all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment, you get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, currently, Intel, yes, we are back to close to $20, which means that year to date, we're down close to 60%. It now has a market cap of less than $90 billion. AMD sits at above $200 billion, by the way. But AMD has had their own issues. I mean, year to date, AMD is also down. Plus, we've got a Bank of America analyst being a little more bearish on AMD right now, but I already talked about AMD in another video. Looking at what the analysts are thinking about Intel right now, the average analyst price target sits 21.4% higher than the price we're at today. Now with Intel here, you can clearly see what has happened, right? Previously from 2014 up until the top here, 2021, everything was doing fine. Well, maybe let's take 2020 because 2021 free cash flow was already hit there, but revenue, this was basically the peak. And then people that are not familiar with Intel or the industry or all the damage the previous two CEOs have done, they would see this, the decline in revenue, the decline, horrific decline in free cash flow, and they would say, oh, this is all Pat's doing. Look at the destruction of Intel under Pat. But no, what Pat did is come in here and lay down a plan to take Intel back to their highs, right? And these plans usually take a long time, especially for Intel, because Intel has, well, Intel the product side and Intel the foundry side. And the foundry really needs to be an important aspect of this business. Some people say they should just spin it off, sell it to someone else, still have 51% of Intel foundry, but spin it off. I think that will be a mistake. Plus, there is also some legal aspect to it because they got money from the government. So I know there's a whole thing where they still have to own, I think, over 50% of Intel foundry. So, okay. Anyways, Pat came in, laid down a great roadmap, things that nobody in the street thought would be possible. 5 nodes, 4 years, that's still well on track to be achieved. Yes, it's true that there were some bumps in the road. Yes, huge restructurings as well, which we've seen last quarter, right? Huge miss on paper, huge miss on gross margin and operating margin and EPS. But gross margin was actually closer to 41% if you exclude the charges, and EPS would have been a 16-cent gain excluding the charges, with 3 cents being, well, the expected number. So yeah, it's true, chargers are a real thing, turnarounds, layoffs, all of that are a real thing that are impacting the business. But if you exclude those things, the business has actually been doing a little bit better than what the analysts were expecting. And then for the next quarter, a beat across the board. So I think with all the noise around Intel, people forget what this business is doing right now, what this business is going to do in 2025. I believe 2025 is going to be one of the most important years for Intel. We're going to hear way more about 18A. We're going to hear way more about the next CPUs, the next GPUs. I want to talk about GPUs as well, because finally, we might actually have an affordable GPU with 12 gigs of memory at an affordable price. So yeah, fingers crossed that Intel does not drop the ball on the GPU line, which funny enough, it does seem like the GPU side of Intel is actually doing better than the CPU, meaning the team there are, if you watch Gamer Nexus, he had someone come on in the last couple of days, talk about the GPU Battle Mage, and to be honest, quite good. I only wish that the CPU side of things did the same. Touching back on what has happened at Intel. So Pat left, and now we've seen two new appointees to Intel's board of directors. We've got one former president and chief executive officer and chairman of ASML, and then another one, a chairman and interim CEO of Microchip Technology. I mean, that's all great, but the timing here is just very, very strange. And again, the explanation or the lack of explanation of ousting your CEO without having a replacement ready is just so strange to me. What else happened? Well, Pat was actually quite active on X, which is quite strange since he's not the CEO of Intel anymore. So on the right, we've had a post by Tech Power Up saying that Intel 18A process node clocks an abysmal 10% yield. Fast forward to today, on the left here, Intel 18A yields are actually okay and the math checks out. Kudos to them for actually correcting themselves. We've also had here a Dan post on X saying that TSMC 2nm process has achieved over 60% yield in trial production, surpassing expectations. Media reports citing unnamed supply chain sources. Mass production is on schedule for next year. The manufacturing technology is being developed in TSMC's fab, and when ready will be transferred to its other fab as well. The 2nm process will be TSMC's first to use a new type of transistor, nanosheet, more complex than the FinFET transistors used in 3nm. And here, Pat came in and said speaking about yield as a percentage isn't appropriate. Large die will have lower yield, smaller die, high yield percentage. Anyone using percentage yield as a metric for semiconductor health without defining the die size doesn't understand semiconductor yield. Yields are represented as defect densities. To be honest, I found it very strange that Pat now decided to be, well, the voice of reason on X and defending Intel. Why aren't more CEOs using platforms like X, maybe other platforms as well, to actually, I don't know, announce stuff, respond to rumors, reports, and stuff like that? For example, with the whole overheating issue, right, with Intel CPUs, why not tweet about that, right? Why not respond and be public about this? I just don't understand. He also posted this. Look at this. It's like a proud dad with his children here. Had the chance to tour the XAI data center. Incredible what's been built in such a short amount of time. Great to see our Intel Xeon processors powering the AI head nodes. Kudos to Elon Musk and the entire team for continuing to raise the bar. Tagging here Grok and Michael Dell. And by the way, this is also very, very bullish for Intel that they are included in XAI's data center through Intel Xeon. Moving on to the Intel Foundry side, and we've got some big announcement that they've made at the IEDM 2024 conference. So they found a way to make the connections within a chip more efficient, reducing their capacity by up to 25%. This means that chips can work faster and use less power. They've also developed a new technique to assemble different chips together much faster, a 100x improvement. This will enable the creation of more complex, powerful chips. And then they're also working on new types of transistors that are smaller and more efficient. This will allow them to pack more transistors onto a chip, leading to even more powerful and energy efficient devices. Now, why does it matter? These advantages are crucial for the future of computing, especially for AI. They will help us create more powerful and energy efficient chips that can handle the increasing demand of AI and other complex applications. Now, of course, with Intel Foundry side, the more clients that get announced, the more clients that are public, the better it will be probably for the stock. The business itself, if they already know the clients and the public doesn't, then the business will be fine. It's just the stock that will react in a more positive way if we get more announcements like the one we've had with Amazon, for example. Last couple of things here. I've heard a lot about how ARM will destroy Intel and AMD, in this case through Qualcomm. Well, this was published not so long ago. x86 reigns supreme as Snapdragon XLE chips captured just 0.8% of the market with 720,000 units sold in Q3 2024. Qualcomm misses out on rising AI PC sales with Intel and AMD taking charge. And then the last one here, and that's with regards to Intel Arc B580 and Intel Arc B570. This is basically their GPU, the Battle Mage. And to be honest, this is very, very welcomed because, first of all, look at the price. Starting price, $250 for the B580 and then $220 for B570. Now, of course, this one right here on the left is more powerful than the one on the right. But if you're a gamer, if you've been following the whole GPU thing since the pandemic, you know that this market has gone crazy, right? Everything has to be at a premium. You're paying a huge, huge premium for not even the best of the best performance. So getting something like this that's more affordable with, apparently, these are, of course, their own numbers. When these things get out to the public, we will get more and more public reviews. But here they compared it to the NVIDIA RTX 4060. They're saying here 10% faster on average on those names. When looking at best-in-class performance per dollars, it's also beating out AMD and NVIDIA with regards to raster and ray tracing. I also checked online and I've seen on one specific website that, well, most of them are sold out already. Only one is still available for pre-order here, this one right here. But all in all, it's great for the gaming scene to finally have an affordable GPU at under $300 with 12 gigs of memory. Last thing here before we end this video and I conclude, this was last quarter's results. So CCG came in at $7.3 billion with operating margin of 37.1%, which is higher than the last two quarters before that. If you look at data center and AI, $3.3 billion, also higher than the last two quarters, and operating margin is up quarter over quarter. But just focusing on the product size, on the CCG side here, $7.3 billion. I'd like to remind you all that this is much, much bigger than AMD's client side. Of course, AMD's data center side of things is growing much quicker than that of Intel, and actually last quarter, it surpassed Intel's data center and AI revenue. Last thing here is looking at Intel, the stock. We're now under the 50 and the 20-day moving average. We're still around $20 or so. We did go lower previously. Back in September here, went under $19. So let's see if this time it can have maybe higher lows. Currently RSI is low, but not oversold like the last time here. So remains to be seen. It's a bit in no man's land right now. So the safe thing to do here is probably look for a green candle on the weekly. And so to conclude, while there is definitely a ton of noise around Intel right now, a ton of question marks as well, since Intel is now without a CEO, which is crazy. Yeah, there is interim two CEOs, but I don't count them as the real CEO of the company. All in all, nothing has changed much from the report that they gave us, plus the guidance as well, right? Everything seems to be still on track. 2025 still is an important year for Intel. New product launches for the CPU side, 18A, Xeon, all of that is still on track. So yeah, I'm not selling any shares right now. I'm also not willing to buy more shares at the moment until I get an explanation and maybe an announcement of a new CEO. So yeah, maybe when that will get announced, maybe the stock will already react positively and I'll miss on the first 10-15% gains. But that's fine. That's fine because one, I'm already down on my position, and two, I'll be more comfortable buying more shares with the information provided. And by the way, if I don't like the new CEO, then I might just cut my losses and move on to something else. But deep down, I'm telling myself, Intel, $90 billion, the worst is probably behind them. I mean, they're also trading at price to book under 1, which is quite ridiculous. But Intel at $90 billion, looking at what this company is currently generating, what's expected to do in the coming years, risk-reward wise here probably favors the reward. But again, there is still a lot to do. But what's to say that Intel cannot become bigger than AMD is today, 5-10 years from now? Probably 10 years from now, we already know before if it's going to be successful or not. We're probably going to know this in the next 12 months as well. So yeah, if it does manage to turn itself around, if it does manage to focus on leadership products, focus on products, because that's the most important part here of these types of businesses, right? And that's something that AMD did well, especially thanks to Lisa Su, is to make the best products. You make the best products, the business will take care of itself. Because what's the point on focusing on business metrics if the product sucks, right? If the product sucks, nobody's going to buy it. So Intel has to make good products. You make good products, you're going to get a lot of new customers on the data center side of things, on the CPU and on the GPU side of things as well. So all in all, that's about it from me. I know, pretty long video, lots of talking, blah, 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 but Intel, pretty important company, so I wanted to be quite clear with the way I'm thinking right now. Do share your thoughts down in the comment section below, like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.